I think in the next 3 to 5 months, silver's going to blow out $50. Right now, I suspect that the first surge that we're getting that has begun, I'm not waiting on any more numbers. In the next 3 to 5 months will get you well above 50, likely into the $60, $70 range. Now, that's not the end of it, but that's the next surge. And I think it will be quite dramatic. I mean, obviously, if you go there, that's a big percent gain in silver over such a small period of time. But I think between now and later in the year, we're going to see somewhere 60 to $70 silver.
When silver begins to run, it doesn't walk, it sprints. It doesn't give you polite warnings or gentle price increases. It blasts off like a rocket, leaving slow money in the dust. And according to veteran momentum analyst Michael Oliver, that ignition sequence has already begun. For over 4 decades, Oliver has dissected markets using a powerful lens most analysts overlook: momentum, not just price. And what he's seeing in silver right now isn't just bullish, it's explosive. The signals flashing across his momentum charts are the same ones that preceded silver's legendary runs in 1980 and 2011. But this time, the setup is even tighter, even more compressed, meaning the launch could be even more violent. Wall Street? Still asleep. The mainstream media? Silent. But under the hood, something massive is brewing. Silver is staging a stealth breakout, a momentum-driven move that's breaking free from a multi-year consolidation. It's building pressure like a volcano, and Oliver believes we're not just going to see new highs. We're talking $60 to $70 silver before it even takes a breath. But here's the kicker. This breakout isn't just about silver. It's about what follows: the implosion of the gold-silver ratio, the historic outperformance of mining stocks, and a revaluation of silver's role in the global financial system. And when the junior miners start to move, when they catch the momentum tailwind, they don't just double. Some of them triple or quadruple in a matter of weeks. This video breaks it all down for you. We'll walk through Oliver's most critical charts, show you why silver is finally waking up after a decade of manipulation and neglect, and explain how smart money is already positioning for the next phase of this supercycle. If you're holding silver or even thinking about mining stocks, this video is your wake-up call. You are living through the early stages of what could be the most asymmetric opportunity of the decade, and those who understand momentum will have a massive edge. So buckle up, hit that like button to push this video to more truth-seeking investors, subscribe so you don't miss the next breakout signal, and drop a comment below with your 2025 price target for silver. Let's light up the algorithm, and let's light up your portfolio. Let's dive right in.
The run just began. If you go back and look at a silver price chart, just what idiot chart I call it, because it's just price, okay? I go back to last May, silver hit a high at $32.70, okay?
Right.
Then came back up in October, hit $35, dropped. Came back up in March of this year, hit $35, dropped. But if you draw a line through the May high of last year, you can intersect most of the action, all the action since over the last year, okay? May to May. We've been above it, below it, but it just basically hovers around that midpoint. You had a plunge that cleaned everything out, that fake out sell-off to 27.50 that occurred in the first week of April, where silver thought it should be part of the stock market. And no, okay, anyway. Silver, during that year of nothing on price, where it just looked like confusion, on momentum, you get a different picture, which we, of course, include in our reports. That's our prime focus. You had a downtrending channel on momentum that smacked you in the face. When you looked at it, you said, whoa, if I get above that channel, I'm breaking out. Okay. When we came back up to 34.90 a week ago, not back to the 235 peaks at 35.20 and 35.40, whatever they were, but just below there, you blew that channel out on momentum and says, okay, I'm awake again. Which what you've seen for the last year is noise. Me correcting by going sideways. And suddenly you go to 37. Okay, then you back off a bit. Now you're mid-36s. Okay, you're cooling off for a few days. Here's my projection. I think that silver is going to, one, outpace gold now going forward and regain normalcy versus gold. I specifically think silver could go to, right now it's like 1%, 1.1% of the price of gold. A lot of people measure it the other way, but we do it, we divide silver into gold. I think it'd go to 2% easily. Well, that's almost a doubling the current valuation level of silver to gold. Okay, so that's one background hint. Of course, that doesn't tell you about price. It just says silver's going to beat gold by doubling its gains over the next whatever. I think in the next 3 to 5 months, silver's going to blow out $50. Wow! Those are old phantom highs. And when I say phantom, what I mean is when you go back and look at them, one of them didn't even quite get to 50. But let's call it 50. You stayed up there for hours, not months. Okay, it was like thin air, and immediately relapsed. So really, he wasn't up there for long. And two, when you factor in the decay in the money unit, the real value of the dollar, 1980, 2011, we could be at $200 to match those highs. Real dollar terms. Okay. But right now, I suspect that the first surge that we're getting that has begun, I'm not waiting on any more numbers, in the next 3 to 5 months will get you well above 50, likely into the $60, $70 range. Now, that's not the end of it, but that's the next surge. And I think it will be quite dramatic. I mean, obviously, if you go there, that's a big percent gain in silver over such a small period of time. But I think between now and later in the year, we're going to see somewhere $60 to $70 silver. And again, that's not the end of the move. That's just this surging leg. And I see silver outperforming gold during that time. And I also see the gold and silver miners outperforming gold during that time. I measure it a different way. I simply divide an ounce of silver to gold. And right now you're 1.1%. Well, if you go back over the last 50 plus years and look at each year, what was the best reading that silver had each year at some point in that relationship to gold? 2% is almost normal. It occurred like 21 of the last 50 years. Silver's at least been 2%. And those weren't necessarily even dynamic bull trend years. In the more dynamic bull trend years, like 1979 and 80, or 2010 and 11, silver got up to 3.5% and more, the price of silver. Well, just forget the price of silver right now and gold. Just look at that spread and say, well, gee, I'm going to buy something at $1.10 and it's going to go to $2. Okay? That's nearly a double just in the relative performance.
Right.
I say go to $2. That's not even some outlandish norm. That's the norm. 2% is like a median for 50 years. And given that we're in a bull trend, we could go further than that. But right now, I'm focused personally on this particular leg, in part due to the fact I'm also heavily into calls. And calls have time sensitive. But I do think in the next 3 to 5 months, you'll get that kind of dramatic, I'm out of here move. Not that that's the end of the move, but that is the surge that I'm looking right now. And I think that it's about to unfold. And there's some other events in other markets that are also at what I would call major snap points.
Michael Oliver doesn't follow narratives. He follows momentum. And right now, silver's long phase of dormancy has ended. Looking at momentum charts rather than price charts, Oliver shows that silver has decisively broken out of a narrow momentum range that's held it back since mid-2021. That range acted like a coil, building pressure under the surface while the price appeared aimless. Now, that coil has snapped. Silver has surged through its 36-week average, and the momentum structure underneath tells Oliver that the market is no longer confused. That's crucial. In his words, once you get out of confusion, that's when the real move begins. Historically, silver doesn't just meander upward, it explodes, and Oliver believes this breakout could take silver up to $60 or even $70 before it even breathes. That's not just a bold claim, it's based on rhythm and market memory. Silver's past bull runs, like those in 1980 and 2011, were chaotic, vertical, and short-lived. But the current move is different. It's foundation-based, supported by a long base and technical consolidation. Then comes the gold-silver ratio, the sleeping giant. When you divide silver by gold, the current ratio is sitting around 1.1%. But historically, silver trades closer to 2% of gold's value, and during bull runs, it's pushed above 3%. If gold holds steady above $3,500 and silver regains just 2% of that value, we're looking at $70 silver. At 3%, silver explodes to $105. And based on current momentum signals, that trajectory isn't just possible, it's accelerating fast. Let's get back to Oliver's video.
We plot the spreads on these guys about every weekend report. What we do is we divide the price of GDX, for example, or GDXJ into the price of GDX. So we get a spread relation between the junior miners and the big miners, okay? And since 2020 surged, remember, everything went up big then. Silver went up big, gold miners, gold, et cetera. The relative performance of the junior miners dropped back down and built what, if you look at the spread chart now, forget the price of the ETFs themselves. It built a base. Whereas the performance dropped and then it went sideways. The top end of that base was so definable, an idiot with a crayon could draw on the spread chart. We broke through that. The junior miners have now broken through, meaning the junior miners are now about to outperform the bigger guys. Now, that could have, some meanings to it, and I don't want to try to interpret it too much, but when money flows into the mining sector and then focuses more on the juniors, it suggests to me that there's some nervous people in the stock market who are not normally gold investors, but they've started to hear about gold going up finally. They got the message. And the miners have done quite well lately, even on price basis to, sort of garner their interest.
Yeah,
I want to buy cheap. They want to, a lot of investors like to buy more stock at a cheaper price. So that means the juniors. So that could be one of the influential factors in that shift in the spread. In other words, public interest in the sector. The other spread that's going to gain, I argue, is silver versus gold. Now, when I go back, now let me give you context on the gold miners versus gold. When you go back, we've run charts on this to the 1980s, and you plot the XAU index, which is gold and silver miners, Philadelphia index. It has a long history. You go back in the 1980s through the present, between the 1980s, 90s, and into 2000, early 2000s, it was in a spread relationship between 17.5% of the price of gold, dividing XAU into gold to get the express as a percent, and 35%. So again, there's this range. Let's call it 17.5, 35. You lived in it. When we went into the bear market, 2013, 14, and 15, that spread collapsed all the way down to 4%. Imagine a stock that's been living 17.5 to $35, then goes to $4. Okay, it's a wipeout.
Yeah.
But since that late 2015 low, where the miners were lowest they've ever been relative to the mother metal, the spread has upticked a bit and gone into a range. Right now, that spread's at about 6%. Divide XAU into the price of gold. Still very low, but it's firming, meaning it's actually higher right now than it was in late 2015. That means the miners have actually, if you do the math, have gained more than gold since the bear low. Hard to believe because of the tone, the way the price has advanced has been sort of sloppy. But actually on a net basis, if you bought gold miners then as opposed to gold, you did better than buying gold. Okay, when I look at that spread chart, and we examine it technically, you come up out of this base, and I think that's what you're about to do, you're going to go up to next resistance. Where's next resistance? 17.5%. Multi-decade lows, okay? That's just getting back to the bottom end of what had been the reality for 20 years. That's a tripling, in the price of miners relative to gold, current levels. So I argue not only is silver going to outperform gold going forward, but the miners are going to vastly outperform gold. And again, that's probably due to sense of growing uncertainty about the stock market, despite the recent teaser rally, which, by the way, is not reflected in the leadership anymore. And people get nervous and they look around and say, well, what's working? And a buddy down the street, he bought gold miners 6 months ago and he's smiling. And they said, well, I didn't believe you, but, maybe I need to do that. And so they start to move some of their money. They're not going to buy silver futures, okay? And not necessarily options, but they'll go in and buy those miners because that's a stock and some of them have dividends and so forth. So I think that's a reflection, this shifts toward the miners, not only in the cheapness of the miners relative to gold or relative to the S&P even, but in the shift in sentiment that's beginning, looking for a better place to be, lower risk, greater reward potential. I think that's what's transitioning right now.
As silver begins to roar, another market is quietly preparing to follow: mining stocks, especially the juniors. Oliver has conducted a thorough analysis of the spread between junior miners and majors, using proxies such as GDXJ and GDX. What he sees is a breakout from a 7-year momentum base in the GDXJ to GDX ratio. That's a textbook setup for juniors to outperform majors, which historically happens when silver breaks out. But it doesn't end there. Zooming out further, Oliver analyzes the XAU index versus gold, a classic metric for miner performance. In the 1980s and early 2000s, the XAU was worth up to 35% of the price of gold. During the brutal bear markets of the last decade, it collapsed to just 4%. Currently, the ratio stands at 6%, but it's rising. A return to even 17%, the low end of the historical range, would triple the value of mining stocks relative to gold, even if gold stays flat. And that's before accounting for the leverage effect of rising metal prices. Oliver notes that this isn't about theory anymore. These momentum shifts are in motion. He calls them developing breakouts, not maybe later setups, but signals already underway. His confidence is based on repeating structures in price behavior, going back to the dot-com bust, the gold run of the 2000s, and silver's chaotic climb in 2011. In other words, the rocket's on the launch pad. The ignition has already occurred. You're not early anymore, but you're not too late either. Investors waiting for a perfect entry point may miss it entirely. When silver starts its vertical moves, it doesn't send invitations. And the miners? They're the leverage play, the amplifiers of this trend. So ask yourself, are you holding the right assets? Are you exposed to vehicles that could triple or quadruple in value with the same momentum that took Bitcoin from $5,000 to $60,000? This isn't hype, it's history repeating. With a catalyst, the markets are only now starting to price in. Like this video if you found it helpful. Subscribe to stay updated with real insights, not mainstream fluff. And leave a comment. Are you positioned for silver's breakout? The markets may be manipulated, but the momentum doesn't lie. Thanks for watching.